All right, everyone, welcome to the PivotBoss Hangout. This is the first monthly PivotBoss Hangout for the 2015 year, and I'm super excited that you are taking the opportunity to both share this live and also replay this later. Thank you very much for being a part of this. But basically, the idea behind our PivotBoss Hangouts is to provide two things. First of all, is to provide a monthly outlook for anyone that's willing to listen to my outlook, which is an outlook that's been cultivated over 16 years, 17 years of live in the market experience, both professionally and also individually. And this has been an approach that I've studied for quite some time, and I've gotten really good at, which is, I'm affectionately calling this thing the PVV method, which is the price, volume, and value method. But basically, identifying key levels on the charts that really make sense according to what the market participants are saying about that level. So we're going to get into that today, and I'm going to show you a lot about where I think the market's heading for the various futures contracts. We can also take a look at some stocks if you guys have any ideas that you'd like to share. But what I'd like to do, again, the purpose of these monthly Google Hangouts is going to be to first give you a reliable market outlook for the upcoming month, and also to introduce traders to PivotBoss, to me and my services if you've never come across me before. So I'd like to first introduce myself. My name is Frank Ochoa. I am PivotBoss. I have been trading in the market since 1997, when I was the summer after my freshman year in college, and basically since then I've been live in the market ever since. Again, as an individual and also professionally, I spent 11 years in the professional ranks developing software platforms, algorithms, trading models, and also training traders. So I have a really great experience on how to do these things. And I also make things very easy to understand with the way that I communicate my information. So there's going to be a lot to really get to here. So I just want to go ahead and say thank you to everyone. You can see the website right here. This is pivotboss.com. If you're new to PivotBoss, you can go to Start Here, and it'll do a pretty good job of getting you indoctrinated into what we do, what we offer. There's a lot of free content available at PivotBoss News, PivotBoss Commentary, Hangouts. These are prior Hangouts, recent winners, education, lookbooks, and a resource gallery. So you can browse those. We are now offering a 2-week trial to our premium membership. So this is something that I want every single person to take advantage of at some point, the 2-week trial. And we also have our my book, Secrets of a Pivot Boss. Secrets of a Pivot Boss is something that caught on like wildfire big time. When I wrote the book, lots of folks really loved it and have given me phenomenal feedback for the book, from around the world, and I'm super happy and grateful for that. And again, if you're a trader, I believe every trader should have a copy of this book, so check that out. Our premium content is here, and again, you get a 2-week trial to that if you'd like. And the premium content, you can also browse our Getting Started with Premium section. I'll walk through some of our analysis here for premium content, but basically premium is analysis for traders. So if you're looking for analysis, you're looking for trade recommendations, you're looking for reliable market outlook and analysis, whether it's short-term, medium-term, long-term, that's what we provide with premium. Lastly, our master's content. This is our training. So this is, if you want education, you can go to PivotBoss Masters. We have an amazing deal there. You pay basically one time, and you'll never have to pay for education again through PivotBoss Masters. We offer education that will continue to be added to our resource library for traders from around the world. So that's a quick intro on PivotBoss. Again, there's a lot of great links here. Start here if you're new, but there's a lot of great content on this website for you to browse and learn through. Now, I do want to take a look at the markets. Let's go ahead and share our market software here. We're going to share a new one here, and it's going to be Market Delta. So I do use Market Delta in my trading. I also have Thinkorswim along with other platforms as well, but Market Delta is my preferred active trading platform. I really enjoy it. I'm not paid by them in any way to endorse the product. I just really fell in love with it. It's a product that, you know, as someone with a lot of experience developing platforms, developing algorithms, developing systems and indicators, and doing that whole thing on a professional level, I really am able to see all the different nuances they put into this platform to make it robust and make it awesome. I'm not saying that it's the easiest to get a grasp of if you're new to trading, but it is a platform that has all of the major things that you want if you are an active trader. So let's go ahead and take a look now at a few charts here. I always like to start with a top-down approach, and what I'll be doing is I'll be looking at my ES chart. This is the ES in a higher time frame, the daily time frame, and this is, again, let's go ahead and stop the data for a moment. Again, when you're looking at this, something that I do, and again, I have already a lot of my analysis on the board, but if you've never come across me before or are just now beginning to understand what I do in terms of analysis and how I approach the market, the first thing I do is I'm a trader. I'm not a scalper. I'm not a swing trader. I'm not a long-term investor. I'm a trader. And my goal is always to identify value in multiple time frames, because if you can identify value, if you can identify those areas where prices is being accepted by the market, and also identify those areas that is being rejected by the market, you basically have a trade plan for trading any market you want on any instrument, whether it's ETFs, whether it's stocks, futures, options, forex. It doesn't really matter. If you have valid price and volume information on your chart, you can use my approach to analyze any market in any time frame. So that's something that I did consciously in my own approach many years ago, because I noticed that many traders, you know, if you're trading, you know, if you had a trader that was an inactive day trader or a scalper, they had a certain way of approaching the market than someone, or using different tools than someone that was trading on a swing basis 3 to 5 days or 2 weeks out, or someone that was trading 2 to 3 months out as a position trader. And for me, it was almost a lazy approach back then, but I really didn't want to have to use a whole lot of different indicators for just to trade a different time frame. What I wanted to do was generate an approach that can be used in any time frame. It doesn't matter if you're looking at a 5-minute chart or a 1-minute chart, or using a volume-based chart or a Rinko chart or a weekly chart or a daily chart. It doesn't matter. You can use this approach because it's based on price, it's based on volume, and it's based on value. Those are the major things that I use in my charts for analysis. So now that we have the early idea of how I analyze the market here, just with those in view, you can see I already have a fully annotated chart here for the ES, and you can see all the various analysis that I have. The major forms of analysis that I use are volume at price, the volume profile, and the volume profile is this guy right here on the right, and this tells you all of the volume that is traded at a price. And that's very important because you can see the price levels where the market either accepted or rejected. Anytime you have a high volume node here, that's an area that was accepted by the market. That's 1843 quarter, for example. And then sometimes you may have an area like 2013 half, the level I just referenced yesterday, which is a low volume node in the charts. That typically implies rejection, and that's right where the market came to, dropped to, and then held momentarily. So all of these areas are very important, because if you follow value, you're able to see and identify when the market is either taking value offered or bid. And if price then moves away from that value because of that move, it's likely headed to the next area of value or a prior area of value, or it's going to look to create new value. You know, this is all auction market theory stuff. So what I do when I'm looking at the market is, number one, I want to know what the volume profile is telling me. I want to know where those composite VPOCs, those micro composite VPOCs are. And you can see in my charts, let's drop a few things off of the profile right now, just so you can see more of a clean view of what I'm doing. All right, so I've kind of backed it off now so you can just kind of see a clean chart. And what I do is, number one, I identify where the highest volume nodes are in the chart, all these little peaks, and you can see I put a pink or a magenta line going right through it. And I mark the level, 80 half, 54 quarter. Over here it'll tell you that's MC VPOC or composite VPOC or whatever it is. And I also identify key levels. These could be LVNs in the profile, and the key levels are always gold. I always make my key levels gold, and those are the money-making levels. Those are the levels that mean something in the charts. I also put these key ranges up, and it looks like a Fibonacci extension tool. I've kind of used it and commandeered it to my own approach, which I'll show you soon, and I'll tell you about that in a moment. But what I do is identify these key points, because you want to know where value is in the charts. At any one time, I want to know that, without having to look at anything, that this pink line right now denotes value or prior value in whatever time frame you're looking at. And that's very important, because if value is going offered up here at 2059, that implies a move to prior value at 1980 half. And that's a setup you'll see me use time and time again. Basically, if price is going offered at value, that's the market and market participants telling you that value at that area is being rejected. And right now you see that. You see price being offered through 59 quarter, and when that happened, especially Friday morning after on the first trading day of the year, January 2nd, 2015, price came up, attempted to test and hold those levels above that value, and instead were rejected. And that led to a move right back to the middle of the prior key range, or the current key range, 2016.75, and has a shot to continue downward into the next HVN below. Because if the market is rejecting this value, then that is an implication that the market is seeking prior value. That would be, again, 1980 half. So again, this is what I do, is I look at price, I look at volume, and I look at value in order to help me determine what's going on. So in this case, what I mentioned to our premium members yesterday evening, and also last week, was that price was attempting to hold above the top of this key range. This is where the price component really comes into play when I'm watching for certain characteristics to play out in the charts. And this is a key range. And this key range is market generated. So the market created this key range, and it created this key range in an impulse move, which means right up here it found a high, couldn't get beyond that high, and immediately sold off until buyers came in to defend, and then you saw a bounce back to the midpoint of that range. When those criteria basically line up, that's when I create this key range. And this key range goes from 2072 quarter down to 1961 half. The midpoint is then 2016.75. Those are the key levels to watch for the range. The other thing to do is, when price is holding above that range, typically speaking, one of two things will happen. Either the market, the bulls, will establish acceptance above that level and lead price into the upside targets, which are the 50% range expansion target. Right here it's 99.75. It's marked 75 because it's marking it from the center of the range. I like to do expansion from the edge. So this is 50% and this is 100% basically to the upside. Actually, this is 25, that's 50, and then 100 is way up here. So that would be the upside key levels if price were to have held above the top of the range. Holding above 2072 quarter would imply acceptance at new highs, and that would imply a move to these two targets, followed by a longer term move up to this target. Instead, what happened was price failed to hold above the top of the range. And when the market failed to hold above the top of the range, the stops came out, because all of the buyers that came in right here to defend, they started to jump ship once their stops began to get triggered. That long liquidation persisted through the MC VPOC and into the center of the key range at 16.75 and into the LVN at 13 half. So Sunday evening, Yesterday, basically, when I gave our outlook to our premium members, I said bears were going to look to defend 46 quarter, and any pullback into the weekly pivot range. The weekly pivot range is here. These three lines, 1, 2, 3. Any pullback was going to be defended for a shot at 16.75 to 13.5. That was yesterday's outlook. And that was a weekly outlook that I offered to our premium members. And it happened basically in one day. This is how aggressive the market can be sometimes when price is at the extremes of a range, up here near highs, and instead it sells off back to the center point. So it's very important to identify, again, where value is, where the edges of the ranges are, because failure to gain acceptance or establish acceptance above the top of the range does two things. It implies a move back to the center with the potential to see a full-on reversal all the way back to the bottom of the range. And I mentioned that to our premium members because we could be looking at a continuation into 61.5, especially after the next bounce. After you see a move like this, a huge sell-off trending move, recently, at least in recent trading, you've seen a roll-up back within the body of the range. And then you see sellers come in to defend and then drop this thing down. So this isn't an easy cakewalk where sellers got in up here or here or here and are just going to enjoy a move down. You're likely going to see some shakeout here back toward the previous week's low, but make no mistake, bears will come in to attempt to defend for a shot at new lows into 19.80.5 with the potential to see 61.5. Very similar to what you see over here, right here. This is very important. You see this big sell-off day here, this trend day down, looks just like this one. And then the upcoming day, you see a tail where price rolled all the way back up, took everyone out, and then dropped it all the way back down and then saw expansion. This is something similar to what we could see over the course of the week, so keep that in mind. Overall, I've mentioned this before, the market, I've been a perma bull here recently over the last 2 years because the market has just gone up. I mean, it's gone up ever since my 2010 and 2011 outlooks, which basically, actually my 2010 and 2012 outlooks. Basically, these ranges down here implied expansion up. We got it, and that was a 2010 outlook. And then over here, once we coiled up again, my 2012 outlook was that we were going to trend higher. And then once we got to 13, it was, okay, this breakaway implies further strength, and then 2014's was the same. So this has been really a nonstop rally for some time with a couple of big hiccups in the middle. But overall, every major pullback has led to new highs within the existing trend. And that's very, very important. Anytime you're pulling back like this, you're going to see a move to new highs. You pull back, you see a move to new highs. You pull back, you see a move to new highs. And this is just something that's been a pattern in the market for some time. Savvy traders continue to buy the dips, and it's up to you basically to see how you want to play these things. Traders play these with the futures themselves, with options, with ETFs, with stocks. It doesn't matter. But the idea is anytime you see a correction in the market, savvy bulls are looking to buy that pullback for a shot at new highs. But we have to see how this thing continues to play out. Right now, 13.5 is very important. That's the midpoint, or just near the midpoint of the range in that LVN. And this could offer a short-term buy opportunity back toward 38.75 short-term. So we could be looking at a bounce up early during Tuesday's session. And then from there, you want to see bears defend 2040 for a shot lower. Otherwise, a push back above 46 quarter opens up a play for the midpoint or the middle pivot, which is the central pivot point at 2058 for the week. So that's kind of the look here for the ES. But again, this key range right here is defined by the impulse move. The highest high could not get above it and sold off until a bounce back to the midpoint occurred. That impulse range is part of my key range analysis, and from there you get major pivots. You get the center, you get the top, and you get the bottom. You can then quarter it like I did here with 25% below the center, 25% above. Basically, that's just giving you quarters of the range. And then from there, you can quarter it up or do halves, however you do it. But each of these ranges are very, very important. Each of these levels are very important on an intraday basis and also on a swing basis. So that's why I watch them, and it's really, really helped with accuracy of key levels in the recent trading. Now, I do want to show the intraday time frame for the ES for a moment. This is really important. If you look down in the intraday time frame, something you'll notice is not only those key levels, those key ranges that I mentioned from the key range analysis in the higher time frame, but I also look at key range analysis in terms of the previous sessions range, or even the previous week's range, or the previous month's range. Whatever that range is, I use expansion targets outward in order to identify forecasted reliable targets in that direction. So looking at this in an intraday time frame, what does that mean? It means these orange lines right here, 1, 2, 3, 4, these are the range expansion targets from the previous session's range. So on an intraday basis, what I do is I identify what the previous session's range is, the high, 67.5, the low down here at 38.75. You take that range, you find how large that range is, and then you basically divide it by 4 to give you your expansion targets. And then you take from the bottom of the range, you forecast down 25%, that gives you your 25% target. Forecast down 50% of that range, and you get 24.50. Forecast down 75% of the previous day's range gives you 17.5. Forecast 100% gives you 20.10 quarter. And look at how these key levels, these pivots, played out during the session. Here's the first target reached. Price pushes through it, makes it resistance, continues through the 50% target, comes back, hits the 50% target right here, resistance, again pushes down, makes the 75% target resistance before hitting the 100% where it closed the day. Why is this important, and why does it work? It works because it's based on basic math that traders have been using for a long time. It's basically looking at the market in simple mathematical terms that algorithms, that programs can understand. Because if any of you are programmers, and you know, I am a light programmer that's developed a lot of great stuff, but I by no means have significant experience in programming itself, but I do have experience in programming algorithms, programs that mechanical strategies that are designed to make money by themselves. That's what I did at my prior company. That's what we did for our managed futures fund when I was the lead trader and lead system designer. And basically, when you have that type of mathematical background or that program background, you know that basically computers work in zeros and ones. I mean, it's just yes or no. It's if-thens. It's it's just basic numbers a lot of times. You're not doing anything fancy other than saying, you know what, this is your 25, 50, 75, and 100% expansion targets. And then from there, the programs know what to do with those levels. They know to look for potential absorption. They know to look for squeeze plays. They know to look for reversals right on a dime. So it's those types of things that you're looking for as a trader. And if you want to be on the winning side of a lot of these trades, you almost have to think like an algo. And that's something that I've done over the last 10 years at the very least, was think like an algo, because that's what I was forced to do when I was creating these that long ago. When I was creating these programs 10 years ago, I said, you know what, if I'm going to identify the opportunities I want, I have to think like the programs. I have to think like the institutions that are creating these programs. And a lot of times it all comes down to simple math, and this is one of the best ways to do it here. The other thing is obviously watching your value tools. VWAP is a value tool. VPOC is a value tool. The midpoint, the day's midpoint, is very, very important. 5-day VPOC, very, very important. That's really what kicked off this selling to begin with right here at 20.48.5. That's been the high of the week so far, and prices have just sold off since then. So these are the types of tools that I use and that I continue to use day over day. Very, very, very important stuff. Let's take a look at the crude oil chart now. Itching to look at some crude oil here. This is one that we've been nailing big time, because this is a chart that I would have missed a long time ago sometimes, because I'm watching CNBC or watching something else, or watching other people's trades and analysis, because nobody ever thinks the price of crude is going to drop from 100 to 50 and take a 50% haircut here in what amounts to 6 months. Nobody ever thinks that's going to happen. And when you're reading other people's analysis and commentary and things of that nature, it can spook you out of really just seeing what's happening in the chart, which is prices are going down. That's it. Prices are going down. And I've been one of those that over the last 6 months, hey, prices are going down, look to sell rips, especially at the pivot range. If you want a full markup on the latest call I made off of this was December. I made 2 calls in December. The first one was any pullback to the center of the pivot range here is a selling opportunity for downside targets at 62.20 and 58.64, right? That was the idea, and boom, 11 points later we reach it. And then here it was the same thing. If price rallies into the bottom of the pivot range, look to sell it for a shot at seeing expansion through 54 and into 49. And today we almost reached that 49 target. So our next target below is 49 and 48.14. 48.14 is the 25% monthly expansion target. And again, if you're looking at this, I've been using these expansion targets for some time. But one thing that's really important here is that when I was using this early in November, it was mostly below 80. I said, hey, below 80, there's not much market structure. I mean, this thing opens up and you could drop way, way down. And then I started handing off some targets. The first major target I had was 65.89 because that was the 100% monthly expansion target. And after we got below 80, it was a climb downward, and then in that one big session, price sold off from 73s all the way back down and hit that 100% expansion target by the end of the month. Then once price bounced up into the pivot range, it sold off again, reaching monthly expansion targets again, coming very close to reaching the bottom one. And that's how I was able to forecast that 51.08 I've been talking about. This is what this level is here. 51.08, or rather 51.03. That was a level I've been gunning for, and we reached it on the current session. So we finally reached that target, and now we're gunning for a little bit more. But overall, anytime you have a trending market of this nature, what you're looking to do is look to sell into the rips. Very similar to buying the dips in an uptrend, you're selling the rips in a downtrend. How do you know where the rips are? Well, one of the best tools and easiest tools to understand is the pivot range. And this is the weekly pivot range, these 3 lines. This is the weekly pivot point. The pivot point is derived by taking the high plus low plus close divided by 3 of the previous period of time. Since these are weekly pivots, it's looking at the prior week's high, low, and close to give you that center pivot. These 2 are derived by looking at the midpoint of the previous range and then taking the difference between the pivot and the midpoint and then projecting it in the opposite direction. So that's what the pivot range is. I have a lot of great write-ups and analysis and trade ideas using the pivot range in my book, Secrets of a Pivot Boss. And I just love this pivot range. It's something that's stuck with me for a long time, ever since I read Mark Fisher's book, The Logical Trader. He gave his base idea for the ACD method that he uses with this pivot range, and then from there I've expanded it to incorporate my ideas and philosophies, and it's been a fantastic tool. So this is how I've been watching to sell into the rips for pushes down. Again, this was another one right here where price pulls back, selling the rips, and then you get another one right here where sellers are defending the pivot range and drop this thing downward. We didn't even get a test at the pivot range this week so far. Instead, previous week's close was offered straight away, and now we're likely headed into 49 and 48.14. Now, one thing to keep in mind, longer term outlook on this thing. One thing to keep in mind is that prices have been trending steadily down for some time, right? Since 105s on this contract, big time move downward, especially in the last 2 months. I mean, in the last 2 months, we've sold off significantly, reaching 100% targets 3 months in a row, basically. And that's You just don't do that very often. So one thing I want to keep in mind here is I've been saying sell the rips this entire time. I think we continue lower. But short term, we have to see what happens off of this balanced range here. This balanced range, it went offered at 55.68, and this thing could continue down into 43.85 in a heartbeat. But I do want to caution that if bulls do find some type of support down here, then we could see a move back to VPOC, composite VPOC at 55.68, with a shot at rotating all the way to the other side of rejection and the other side of value at 60. Again, any pullback of that magnitude would offer an even better selling opportunity for another trip back to lows. But you know, anytime you continue on in a very trendy market like this, unidirectional, there is the potential to see digestion via the development of a trading range. So keep that in mind. But right now, this thing remains bearish. 54 is a key level. It's the bottom of the key range previous. Any pullbacks to 54 offer a selling opportunity for new lows into 48.14 and 43.85. So that's crude oil in a higher time frame sense there. Again, this thing continues to be weak, and you're not going to see any buying participation until you see that blow off bottom, until you see this thing really blow off, and then you see a massive reversal. You know, it's going to take this thing really getting overextended, you know, perhaps down into 40, right, for a shot at really seeing some type of rejection back up. But right here, 55.68 is going to be your key level to watch. That's value in the higher time frame. Since it went offered in the prior period of time here, the first retest is also likely to be defended by bears for a shot at new lows. So that's crude oil. Looking at the intraday time frame of crude oil now, what was important about this was how value had been offered throughout the session, and that's something you always want to note. You want to look for any key areas in the chart that are signifying selling pressure on a day like today, and right here the midpoint and VWAP and the previous low were all keys, right? Previous week's low at 52.03, very important. Price goes offered through that level in overnight trading, comes back to it and makes it resistance. This after taking last week's close offered at 52.61. One thing I mention every single time to my premium members is that watch the open, the after hours open, either Sunday evening or on any day, Monday through Thursday, because the after hours open oftentimes will give you a lot of clues or cues about what's about to come up. Because you can see right here, Sunday evening when price opened in crude, immediately prices were offered above 52.61. That's the previous session's close. What does that tell you? It tells you that the market participants are already rejecting price levels above 52.61. And if you're rejecting price levels above the previous week's close, that implies that market participants are eager to seek further downside price discovery. And that's exactly what happened today. And you knew this right in the after hours trading Sunday evening. That's why I was able to provide my forecast that we were likely going to trend lower into 49 and 48.13. And you can see that was the case here. You may have noticed another trend of mine in terms of identifying key levels. And that is what I call the professional price levels. And these are very important to pay attention to, but basically these levels are the previous week's high, low, and close, and the previous session's high, low, and close. And if I take some of these levels off the charts here, I always make my previous week's information these cyan blue levels, and they're dotted lines so you can see them right across the chart. But these previous week's levels are very important because it tells you who's in control, and it also gives you the early blueprint for what market participants are looking to do. What types of trades are they looking to execute? Right here, sellers identified themselves immediately that they were defending the previous week's close. They pushed price aggressively through the previous week's low at 52.03 and dropped it right into 51.41. which is a key level from a prior range. Price reversed back up to the midpoint and retest the previous week's low from below, and sellers, again, after revealing that they were going to be offering aggressively, defend the midpoint and push this thing to new lows. Very, very important. Price then trended lower throughout the day. Right here, I told my traders intraday that value has been offered in crude all day, and to look to sell 50.85 for a shot at reaching the downside 100% expansion target. And we basically reached that target. Let's see. We did reach it. I forgot where because it's not on the chart right now, but it was about 49.70s, 49, somewhere in that zone. But basically, price dropped off, dropped right into it. So again, this is all about identifying value in the charts, and you do that through looking at volume. Volume identifies value. The more traders that trade at a level, the more valuable that level is. The high volume nodes are always value. VWAP is always value. VWAP is a running tally of the average trade throughout the day. That's value. And also VPOC on a 1 or 5 day basis. Those are all value tools. Watch them very closely. In a downtrending market, you're looking to sell, defend any pullback to value as a bear, and that's what happened today. So overall, this thing looks like it's continuing downward into 49 with a shot at seeing 48.13. If you look at our 100% expansion target here at 48.88, that's another key level that we could be gunning for in the upcoming session. So this is going to be a key zone to watch out for. Overall, this thing remains weak. 51.41 is the key level here. Above that zone opens up a retest, a 5-day VPOC at 52.90 in the profile. So this is a look at crude. Again, a market that I just love. It's been in a perennial downtrend right now, and it continues to provide great opportunities day over day. Let's take a look at the NQ right now in a higher time frame. The NQ has been very important lately, and it's seen some very, very nice moves according to our key levels, and very similar to the ES. Very similar to the ES. This one's all being based off the recent key range. The recent key range. Here's the impulse move. Price sees a high at 43 quarter, and then aggressively sells off until buyers come in. Until buyers come in to defend. Price is too cheap at this point, and buyers get off of the sidelines. From there, they reverse it back to the midpoint of the range. Anytime that happens, I am creating a key range off of it. 40.8075 up to 43 quarter, a midpoint at 42.12. Those are the important key levels, and then from there you quarter the range. Right here, 42.77 quarter is the upper quarter. The lower quarter here is 41.46 half. So my analysis to our premium members yesterday afternoon or yesterday evening, Sunday evening, was that bears were going to look to defend any pullback into the pivot range. You see this pivot range for the week right here? It's lower than the previous week's range. When you have a lower value relationship like that, any pullback into the pivot range is typically seen as a selling opportunity for new lows. So I was talking about how bears were going to look to defend the previous week's close at 42.14 quarter, and any push into the pivot range for a shot at seeing 41.53 half and 46 half. And here we are in one day. We got a big clean out move and dropped right into those two targets. Again, how was I able to identify those two targets with precision? It was all price. It's all based on this price right here. This range, this is the 25%, and there it is. It's not any magic. It's just looking for the right levels that make sense in the charts. And this was it. So very, very nice move right into that expansion target. Again, this is similar to the ES but different, because here's the top of the range at 43 quarter. Prices never got to a new high above it. Instead, there was a lower high that developed here and here, really. When price attempted to push beyond the previous week's high, it was offered. The next week, price attempted to push through the previous week's high, it was offered. And after those two failed attempts, it broke back below the top quarter of the range at 77 quarter and dropped into the midpoint of the range. and then down to the bottom quarter of the range, with a shot to continue all the way down to the bottom at 40, 80, 75. Because remember, if you get a rejection at the top of the range, that's an implication that you are likely going to rotate back to the middle with a shot at heading all the way back to the bottom. So that's the outlook here short term. Now overall, I'll zoom out of this chart again. I'll zoom out, zoom out, zoom out. Look at this. It's been a steady uptrend this entire time. So as I mentioned time and time again, this is a bull trend. Every pullback remains a buying opportunity. Every pullback remains a buying opportunity. May not be the first part of the pullback, it may be the second wind, but every major pullback so far has been defended until the pattern changes. We should be looking for longer term buying opportunities and shorter term, short trending opportunities to the downside. Now, another thing to keep in mind is this is the larger key range that I've had on the map for a while. And this is 36.75 half up to 41.14 quarter. This is where I got that 41.14 quarter. That's the LVN. That was very important. And recently when price sold off, I mentioned that bulls were going to attempt to defend a retest of the top of the prior range for a shot at pushing back toward highs. And it happened perfectly. It got a little bit below 14s, but that tends to happen from time to time. And price dropped into this zone here at 40.80, and then from there aggressively rallied back toward highs. Again, it's because of the range principles, market-generated principles here. This is a key range from 41.14 down to 36.79 half. Price broke through that range. Look how it broke through it on this green bar here. It comes back, retests it 2 days later here, and is defended by bulls where? At the pivot range after a 2-week higher value relationship, and then price rallies to the first expansion target here, hits it perfectly on the nose at 22.75, goes bid through it after holding at the pivot range here, again a 2-week higher value relationship, and then continues higher into 43.31 half. That's the high. So when price developed this range, I mentioned that we were likely going to see a move to 43.31 half when it was down here at 38.96, pushing through this level. I said if price can push through the midpoint of this zone, we have a test at 41.14 coming with upside expansion targets at 22 and 31, and we reached them perfectly. From there, what's this right here? This is rejection of price levels above 43.31 half. When you have that, it implies a move back toward the previous top. That's 41.14, and that's what happened here. So you can see kind of the word story as I put it together. That's what I love about the stock market and the market in general. It's almost like a soap opera where every single day it's a story that builds on itself for the upcoming session, or even 2 or 3 weeks or 3 months down the road, or even years down the road. It's just a soap opera that just continues to play out in the market, and I love deciphering where price is headed and offering this analysis and targets for you traders. So again, this is very important here. Overall, we have a short-term pullback. I believe that buyers will come back and defend for a shot at higher price levels, but a failure to hold 80 here has 52, and then below 52 really doesn't have much in terms of support until 39.91, and then you have the middle of the range at 96.75. So this is going to be really important to see how it plays out if price cannot hold 80, because 80 is going to be very, very important in the charts where bulls will want to defend for a shot at running this thing back up. So the NQ has been fantastic, has been honoring our levels perfectly, and we'll continue to watch here to see how these things play out. Very, very short term. Again, similar to the ES, what we're going to be looking for. Bulls are looking to defend 46s for a shot at rolling prices higher on a turnaround Tuesday back toward 42.01 and maybe even back to 42.12. Keep in mind, any pullback to these levels will still be defended by bears for a shot at pushing price through 46.5 and into 14 and 80 and 42. That's a short-term look here of what the bulls and bears are looking to accomplish. Now, if we look at the intraday time frame, there's something I really wanted to show for the NQ. the NQ was fantastic. And again, similar to the crude oil charts and even the ES, you see our expansion levels here. This is our 25% expansion, 50%, and 75% day expansion targets. These are basically expansion targets using the previous session's range, both in terms of the height of the low and the distance of that range, or what that range is in terms of point size. Forecasting 25% of that range downward from the previous session's low. Previous session's low being 42.01 gives you 41.83. You can see here it was an important level early on until bears wrestled control array and pushed price down into the 50% target. From the 50 back up to 83, that was an 18-point bounce back up, 20-point bounce, defended, back down, another 20 points back down, and then through the pivot eventually for 75%, which basically marked the bottom of the range. Right here you can see back to 41.65 quarter, the 50%, and how important that level became throughout the session. So again, these are the intraday expansion targets, very, very solid. But the thing I really wanted to show you in this chart was the algo key levels, the algo or program-based key levels. And a lot of times what I'll do when I look at the charts, let's drop some of these levels off to clean things up just a little bit here. Take off these. Okay, that's pretty clean right now. What I wanted to show was these program-generated key levels. And these program-generated key levels can turn up in the charts just by looking at the highs and lows or the recent swing moves. And what really caught my eye was here. And this was at 4,300, 43.05, right in this zone, and price immediately sells off. You can see a sell-off here. And this is, the end of the December, basically. Selling off, price comes back to that zone and sees another bout of offering. When price sells off at 4,300, it drops all the way down into 43.33 with a pit stop at 73.5. That pit stop was the prior low here. Okay. You see sellers right here, once they push price through that key level at 73.5, they came back up and sellers defended that key level from above or from below with limit orders in order to push price into the next key level below. When price dropped down into 33.5, it found support and rallied back to the prior key level at 73.5, and then from there sold off again. Basically, the market offered price lower, and there were predetermined key levels that allowed the programs to come in and pick off perfectly, and that was 4,300 to 43.05, 40 to 73.5, and now this is where it gets interesting. So 43.03 half back down to 73.5, that's 40 points. Take 40 points down from 73.5, that gives you 33.5. Take 40 points down from 33.5, that gives you 93.5. Take 40 points away from 93.5, that gives you 53.5. So yesterday when I gave my outlook for our premium members Sunday evening, prices were trading up here somewhere, and I provided 93.5 and 53.5 as the key levels to watch for the upcoming session. You can see here where 93.5 became support, rallied, then came down through it and made it resistance. That was a key level, and it was 40 points removed from the other key levels that had been utilized above. Once price made this resistance, our traders knew that 53.5 was likely the next point down, and there it is. First test was a buy, back up, then it dropped below, attempted to hold below, popped back above, and made it support. That's when you know you have a key level. That's when you know. And so that's how I was able to identify 53.5. It was just basically looking at the rhythm of the market, looking at the ebbs and flows, looking at where the programs were getting the best prices, and then from there extrapolating those prices lower. But in this case, what's really important is look at that 53.5. It's support, and then it goes offered through it. Right here, bears are trying to make it resistance, but the bulls are able to wrestle back control and make it support here, here, and here. that is a major pivot in the charts because it has all of the key attributes that you would see when the market is testing a pivot of that nature. Doesn't mean it's going to hold forever. It just means we identified the right chart for our members again, and you can see how it became very influential throughout the day late in the session. Now, you do have a lot of buyers that came in here, here, that are defending the zone, and perhaps their stops are below 52. There's also stops below that, below the recent low and downward. So if prices cannot hold 53.5 and price pushes through that zone, you're likely going to see a cascade of triggered sell stops into the next targets below, which I would have as 14, 14 quarter, and 15.75 as the next major downside targets if that 53.5 is giving way on a short-term basis. So again, the way I look at the market is always going to be through the lens of price, through volume, and through value. So I'm looking at price to identify which levels to use for forecasted targets, using monthly expansion targets, using day expansion targets, and even using key range analysis. So those are the key ways I use price. The other thing I'm doing is, obviously, if we look at a higher time frame chart again, I'm using the pivot range in order to identify value. So we're looking at price, we're looking at volume and value. So I'll use the pivot range, I'll use the volume point of control, I'll use VWAP, any of those value tools in order to identify selling opportunities. And the other thing I'll do, or buying opportunities, is I'll use volume in the charts here in order to identify acceptance and rejection. So I basically mold those approaches in order to help me get a very good idea for where a price is headed. But overall, what I really do is I try not to predict with absolute certainty that price is going here or price is going there. What I do is I basically perform analysis above and below current price. Whichever way price starts to head is the way that I'm likely heading in terms of trading that direction. And from there, you have your key analysis above price and below price, so that no matter what happens during a market day, all of your key levels are right here represented on the charts. So this is my approach for basically analyzing any market in any time frame with any instrument. And I provide this analysis 6 days a week through PivotBoss Premium and at pivotboss.com. I teach traders how to do this through Premium. It's only $99 a month. You can get a 2-week trial right now. And then you can also get my master's training, which basically teaches this stuff in detail. But I'll be doing this PivotBoss Hangout on a monthly basis. My goal is to do this the first Monday of every month. So this was the first Monday of January 2015. So we're providing a PivotBoss Hangout to look at some of these markets. I want to continue to do this month to month as we go forward. And again, if you want to take a look at my website here, let me pop it up again. The current website right now, very solid here, is basically showing the recent offer here, which is our 2-week trial. And this is very important. If you click on 2-week trial, it'll pop you up with a page that gives you a lot of great information regarding PivotBoss Premium, what we do. You can see what traders thought about us. You can also see some samples on a swing basis, along with annotations to tell you exactly what's happening. For example, when I talked about that crude oil bouncing off of the pivot range, this was the analysis I gave. I said, hey, check it out. We got a downtrending market here. You see a 2-week lower value relationship. I see if price bounces into this pivot range here, this is where you sell it for a move into 58.04. And then fast forward, here we go. Price bounces into that pivot range and drops down into 58.04. That's a precision 11-point move that's worth $11,000 per contract traded, and it happened over the course of a couple of weeks. And that's fantastic. This is the type of analysis that I've been doing for some time. I teach it to all of our traders. It's nothing that's magic. It's more about identifying the proper key levels in the charts based off of price, volume, and value in order to identify those key levels in trade. So you can check a look at all of these ideas here of how I provide analysis and teach on a higher time frame basis. We also have short-term stuff. So if I'm looking at the shorter term charts, I offer these RT playbooks to our traders every morning to help identify what's happening in the charts, to help identify key levels. For example, in this case, I identified the pivot at 40.94. The primary trade is to sell 40.94 for a shot at dropping price into 40.53, which is the previous session's close. And then the secondary trade is to look to buy 40.53s or that zone. You can see a box, that zone, the LVN, for a shot at new highs. And if we go to the next chart, you see the price rallied into 40.94, sold off into very close to 40.53. That's a nice move right there, right out of the gate, which is a 40 handle move. And then bulls did indeed come in and defend and push price back toward 5-day VPOC for another 30-point move. So you can see how I provide very simple analysis for our traders on a day-to-day basis, either on a swing basis or on an intraday active trader basis. So again, I do want to emphasize it really doesn't matter what type of trader you are, unless you're looking at Forex or something, because I'm not doing Forex at this time, although I will take any ideas or suggestions on the markets that I cover. Right now the markets are crude oil, the ES, the NQ, and gold, but I also want to do some stocks and ETFs as well and go back to my roots of what I've done before. If we're looking at another example real quick, this is again something that you see often in the charts. This is a multiple action trade plan here that helps identify the key levels in the charts. The primary trade at the pivot, 39.90.75, that's the primary pivot, and the primary trade is always a reversal of that pivot back up. Failure to hold that pivot likely runs the stops downward into 72.5. And then buyers will then come in and attempt to defend that zone for a pushback to 4,000. That was the idea. But the basic primary trade is pull back to the pivot for a shot up. And if we look at what happened here, price pulls back to the pivot and then rallies right to our target, 27.5, to the tick, right to it, 35-point move. And it happened in the course of, I don't know, 45 minutes. So these are the type of opportunities I try to line up for our traders. Again, you can go to trial offer, pivotboss.com/trial offer, and jump on a 2-week trial. You can also browse our content at PivotBoss, which is basically content that I think is unmatched. I think our training and our analysis is unmatched because I've been at the forefront of this for 16 years and doing it at a high level. And it's something that I enjoy. I have a passion for it. And I think it really shows when you come back and you look at some of my writing, you look at some of my calls. I really do a good point of trying to explain not only why I'm making that call, but also teach you how to do it yourself. So keep in mind, this is a website that offers a whole lot of various ways for you to really take advantage. If you don't want to pay for premium or for training, there's a lot of free content with our PivotBoss commentary, our Hangouts like this one, education, free lookbooks gallery. I love the lookbooks gallery. It's something that you can learn from every single day. Basically a chart gallery with really detailed chart analysis to help you identify, to help you learn how I identify these key levels and what to do with those levels. So again, I want to thank all of you for coming here today and joining me. I want to make this a monthly thing. Give me any feedback. Either respond back and give me some feedback on the Google Hangout comments. I'll also post this to the website. You can give me comments there through Twitter at pivotboss.com. At PivotBoss is my Twitter. If you click on any of these links, you'll actually see my Twitter come in on the sidebar of that post at the bottom. It's at PivotBoss. I do my best to try and try to put out content that is mostly forward-looking, always forward-looking, to help provide some type of help, at least in terms of whatever you're trying to do. If I'm providing forward-looking commentary, you can then use that in your trade plan in order to help you with your trading. So I have a lot of different ways to connect with you guys. I really am excited about 2015. 2014 was a year for me where I really took a step back and worked on the back end of a lot of our infrastructure for our members. And premium and masters members have been extremely excited about those improvements. And now I'm ready to show off some of our new wares here for 2015. It's going to be a fantastic year. Again, I look forward to seeing you next month at our PivotBoss Hangout. And again, feel free to give me any comments, testimonials, feedback for anything we've done here in the past, or my book, or any services that you've had with PivotBoss in the past. I'd love to hear from you because I'm always looking to improve what we do for you. So thanks a lot for joining me today, and I look forward to seeing you again soon. Take care and good luck in the market. Trade well.